South Korea's central bank released its data on the financial market trends for the month of July. Clearly visible are how the ongoing trade war between the world's two superpowers is impacting the local markets. Kim Hye-sung help us look beyond the digits.
The Bank of Korea says the country's three-year Treasury yields moved lower on heightened external uncertainties stemming from the escalating U.S.-China trade spat. Yields fell 0.08% from 2.2% between end of May to the end of June, remained at 2.1% through the end of July, then fell slightly to 2.07% as of Wednesday. The central bank attributed the smaller fall in three-year Treasury bond yields to expectations of a possible rate hike in July, which would have lifted the bond yield. The Bank of Korea, however, stood pat on its key rate, leaving it at 1.5%. The 10-year bond yield remains unchanged from end of June at 2.56% as of Wednesday. Bank lending to Korean households saw a slower pace of growth in July than the previous month on fewer housing transactions. Lending to the corporate sector jumped by nearly $5.2 billion in July on increased demand for loans from small and mid-sized companies who needed to pay their value-added tax bills. As a whole, deposit taking by banks decreased in July to a negative $7.7 billion as firms withdrew funds to pay their first half value-added tax by the July deadline. Kim Hye-sung, Arirang News.